Delighted to introduce our next panel, the future of fintech. Not a small topic, but yet the UK continues to be one of those global hubs when it comes to fintech. So I'm absolutely thrilled to welcome our panelists today, Ricky, Charlotte, Rita, Antonina, and wonderful that you've spent the time with us. I know how busy you all are individually, and your expertise is huge. So I think the most important thing is these are huge experts in their own right, and I'm going to hand over to each and every one of you just so we can do that and for you to share all of your expertise. I'm going to start with Ricky. Please do come off mute, panelists, and we'll very much look forward to the conversation. Ricky, over to you. Please do introduce yourself.
Hi there, guys. Lovely to meet you. I'm Ricky Knox, founder and CEO of Tandem Bank. Tandem is one of the UK's sort of proud cohort of early digital banks, along with Monzo and Starling, Revolut. Tandem is currently focused very relevantly to our last speaker on leveraging its banking license to drive towards net zero 2050 and building a green bank. One of the challenges, I suppose we see there is two big challenges there. One is awareness. I'd like to help, but I don't know how, and that's where obviously Avoco are participating. The other question is, a lot of those changes actually require investment, whether it's a new electric vehicle or, upgrading your house, and that's where Tandem comes in. So helping savers put money in to fund that transition, and people that borrow money to transition out the other side. But yeah, so that's what we're excited about. But history in building a number of different fintechs and investing across the space. So lovely to meet you guys, and I hope we'll have a good conversation today.
I know, Ricky, having been lucky enough for you to be in an interview with us in the Chief Disruptor magazine a number of years ago, that was a fabulous, gritty interview. So thank you so much indeed. I'm going to hand over to Charlotte. Please do introduce yourself.
Sure. Hi, everyone. I'm Charlotte Wood. I'm the head of innovation at Schroders Investment Management. So we're a global investment manager, participating in wealth and asset management around the world. My team looks for startups that we might be able to work with in different areas of our company, and that ranges from real fintech solutions that we can use to distribute our funds or work with our clients better, all the way through to enterprise tech solutions, so looking at cybersecurity and even marketing and HR solutions. So very broad, and looking forward to the conversation today.
Thank you, Charlotte, so much. And Rita, please to introduce yourself, please.
Thank you, Emma. Hi, good morning, everyone. I'm Rita, CCO and Director of Mode, which is a payment crypto digital wallet startup in the UK. Previously, I was with Alipay for 10 years. I founded Alipay's business in Europe back in 2014. And most recently, I was a CEO of Alipay UK. Very much looking forward to the discussion today.
Thanks, Rita, so much. And over to you, Antonina. Thank you.
Thank you a lot. I'm very happy to be here. Thank you for having me. I'm Antonina. I'm from SoftServe. SoftServe is a global company with locations in more than 40 countries. We are actually a tech advisor and a software services provider. So we actually help the financial services companies to build their solutions and to increase their market share with the leverage of the technology and our technical capabilities. And I'm the head of financial services lab at SoftServe. I oversee the business and the relationship with our clients from the financial services market, specifically in the EMEA region and in UK.
So I'm thrilled you're all with us. This is going to be a fabulous conversation. Ricky, obviously having had the interview with you a number of years ago, I know that you will give us your views, which I'm thrilled about, but also the experience and expertise you will hold is fabulous. So I'm very happy to come to you individually and sort of ask for your views, but it would also be great for you to just openly just give your views as we go through, obviously trying to respect each other in terms of having a breathing space before the next person speaks. But I love an energetic panel. I love it when we get involved. So please feel free to speak openly, and we'll try and make sure that all of you have an equal time together. So I'm going to just sort of set the scene in terms of what might feel like an incredibly basic question, but actually I think is fundamental to where we start. So what does it mean to be a disruptor in the financial services space? Rita, I'm going to start with you, please.
Thank you, Emma. I think, like I'm going to, obviously there are so many aspects to this question, but I think I'm going to focus on actually the topic, the previous speaker was focused on, which is purpose-driven financial services. I think, we live in a era that, we need to start thinking about how to balance profit and purpose for businesses, especially fintech. And as my experience has always been in building consumer-facing fintechs, I want to talk about this from the angle of how fintechs can build products that integrate green initiatives into people's daily lives and balance that with commercial incentives. I think Ahmed of Invico already gave lots and lots of good views on this, but I think there are really, because fintech are building products that are changing how people consume, transact, and invest. So we can play a really big role in this. I just want to use an example from my experience in Alipay. So Alipay launched the product within the super app, which is called Ant Forest. So it's a very good example of including green initiatives into the day-to-day lives of their users. So basically, and with the gamification feature, right? So basically, the users are rewarded green energy points for sustainable behaviors, such as making online transactions, taking public transportation, bike sharing through Alipay. And when you accumulate the green energy to a certain point, the Alipay will plant a real tree for you. So it's like a gamification of and plus attraction of new users. Like within a few years of launching it, over 500 million users are active on Ant Forest, and over 100 million trees were planted because of the program. I think that's a very good example of like integrating that like commercial purpose with driving green initiatives within the users. So I think that's one aspect, and another aspect is how fintech can play a great role in driving green investment behavior among users. Like we know the retail investors have been rising, right, during the pandemic, and like ESG investment is still a very novel idea among retail investors. Lots of the messaging and education about ESG investment is very important, especially for the younger generation. And I think fintech can play a very big role of giving the message out to younger generations. This is actually a kind of investment you can generate return while doing good for the planet. So I think that's the 2 cents I want to put out there. And I think whoever can drive that balance of profit and purpose will be disruptor in fintech.
Completely agree. Charlotte, shall I come to you? Please feel free to come on in the conversation.
Yeah, sure. So I think fintech's been on an interesting journey, and I think a few years ago, fintech and the word disruption were used almost interchangeably. You couldn't really have fintech without talking about disruption. And speaking from the view of someone who works in one of the financial services incumbents, I think people were quite worried about what was coming into the market. Companies like Ricky, with all the challenger banks coming to take market share, and I think it was seen very much as a kind of competing in that consumer space and looking to take market share and be a better version of the incumbents. And I think some of that still exists and is still very true, but there has also been much more emergence in the kind of working together. There are many more opportunities for collaboration between the incumbents and fintechs that are emerging. We've seen many more fintechs emerging who are actually looking to use to provide services to the financial services industry in order to improve their client experience. So for us, disruption is a little bit of a scary word for existing banks and existing companies, but it's about how can we harness fintech to improve the proposition for our clients.
Ricky, I think it naturally comes to you.
Well, I think there's a really interesting point there, which is there's obviously and obviously I invest across both B2B and B2C fintechs, and most B2B fintechs are very much trying to help Charlotte, and most B2C fintechs in general are trying to eat her lunch. But there's actually been a lot of progress, particularly in the B2B side lately, with B2B SaaS companies, and really driven by the shift to cloud in particular, where people essentially companies need help along that thing, but also a fantastic sort of almost fallout of people like us being annoying and creating competition is that the big companies said we have to do something. They looked at procurement policy and they said, oh dear, we literally can't buy from these fintechs because we've got a rule that says you've got to be quoted if we're going to actually purchase from you. So they changed those purchasing guidelines, which is incredibly helpful because it means that all these B2B guys can actually provide what is a better solution to these large companies. I think that's fantastic. But coming back to what does it mean to be a disruptor? I mean, I think, obviously there's a lot of reference to technology in disruption. And I think there has been, technology has accelerated change across many, many industries. And banking is obviously an interesting one because it was a reasonably late comer to tech change. I founded a number of payments companies earlier. Payments was quite early in that disruption cycle. But I think what Rita said is really interesting in that obviously what that tech disruption did at its most impactful was either to change the potential cost base of these companies so people could compete through price, and you saw that a lot in payments in the early first phase. Then kind of in a second phase, it was through customer control, and this was driven by where lending, for example, within the banks started going online, particularly for credit cards and other things. And a lot of that share actually got taken by different market participants, the sort of money supermarkets of the world and the intermediaries. So ironically, with all this chat about disintermediation, there's a sort of re-intermediation whereby both P2P lenders ended up being not peer-to-peer, but bank-to-peer and hedge-to-peer, because basically they were better at online marketing. Now, I think agencies have sort of equalized that now, and online marketing the banks are pretty good at too. They're still not perfect at originating customers. So you take the example of Tandem. You have to download the app to become a Tandem customer. You cannot download the Barclays app and become a Barclays customer. You have to go to the branch and then download the app. So you still can't actually enter Barclays by route of app. I don't know about Schroders, I'd have to ask. But anyway, but coming back to Rita's point, I think that technology piece is really interesting and what's driven a lot of change. But I think this purpose piece is really interesting. And it's interesting because while consumers' attitudes are changing, they're not changing that fast. What's happened, particularly around ESG, is that investor appetite has driven a lot of change. And on top of that, I think what happens, if you like, what happened in tech was this move, which people don't separate that much, which is moving from, if you like, bank-centric in my industry to customer-centric, where human-centered design and the way that people create products and innovation in technology companies is essentially by looking for customer problems. But then, this sort of, and that change of viewpoint, rather than managing my balance sheet, attracting customers, is a really interesting shift that generates you think differently about your customer journeys and how your business works, and creates lots of opportunity for disruption. But equally, if you look at things from hey, how are we getting net zero 2050 quicker? Again, you get a completely different business rationale. Obviously, it needs to be combined and ideally aligned with your profit goals. But again, an opportunity for masses of innovation, because ultimately you're thinking about the problem from a different angle. Because if you look at it from the old traditional angle, you go, well, I need to be nice to my brokers because my brokers are going to sell my mortgages, and that's 90% of what I do as a bank. And so it's all about I won't use any rude word, but basically being very nice to brokers. If you then flip to a new world where you might say, I want to think about the customer problems, you might create direct journeys. Now, mortgages, that's not really happened yet. There's a lot of people trying, and actually the question of whether customers want it yet. But the point is, you have a very different perspective on the business. But if you come over here from green, so we're looking at this going, okay, we've got people who've got homes that are polluting. How can we help customers provide green credit lines to actually make home upgrades? So actually, how can our mortgages help to encourage those green credit lines? So we know the problems we're thinking about mean that you approach the product development from a very different perspective, which is exciting and drives a different type of disruption, which hopefully has good results.
I think we're in an interesting phase, aren't we? The ESG coming in. When we did our digital trend report this year, that social, economic, environmental, sustainability angle is that long tail, in a way that other things from the pandemic have actually much quicker results, or they need those quicker results. Antonina, I'm going to come to you because I think you might be able to wrap this first point very neatly. Can we gain your views?
Yeah, definitely. And I actually like a lot what Charlotte just mentioned about that disruption is a little bit scary word for lots and lots of players of the financial service market. And this is what we hear a lot from our customers. But and here, this is actually the point of the change, the point where you can change the business model, where you can be more flexible. So if the organization is ready to adapt to the challenges from the market, and when you have it inside of your strategy, and you are able to be flexible enough and to be open-minded enough to rebuild a little bit, or at least adjust the business model, the core business model that you have, by embracing the technology, the evolving technologies from the market, and with the adjustment to the needs of the customers, the evolving needs of the customers, that would be like you are at the right path. And this is actually where we help our clients to not to be afraid to leverage the technology for your specific business model, for your specific needs, to be able to disrupt yourself before you are disrupted. This is like the word disrupt or be disrupted, right? Everyone, this is already like an idiomatic phrase, but this is truth, right? So this is like if you don't do anything, you can stay being afraid, but you still have to do something, right? And onboarding onboarding that eagerness to change into your strategy and doing the exact first steps, starting small, but then having that as a part of the whole business model is the first step that will bring you up to the success. And I like this word a lot, and I also it resonates what Ricky was saying about the market is changing all the time, and there is Tandem, there is Monzo, there is N26. Everyone is changing. They are very flexible, and they are not afraid of doing the create, reiterate. So that approach is absolutely applicable to any type, even to a very legacy, a very laggard organization. And if you are such, you don't have to stay being afraid. Just do this first step, and let's see how you can progress throughout this journey of the disruption of yourself, right? So yeah.
And if anything has really accelerated that disruption, obviously the pandemic has caused major mayhem over the last 14 months. And I think if we naturally then come on to those major innovations coming up on the fintech horizon, many of those will have been accelerated because of the last 14 months. It'd be great to get some views from all of you in terms of what do you see those major innovations being?
So happy to go first, because this actually ties in with a lot of what Rita and Ricky were talking about. So from an investment management perspective, a huge emerging trend we're seeing is in the green finance space. And I think interesting how Rita was talking about the kind of rise of the retail investor, and Ricky saying, people want to help, but maybe don't know how. A huge area that I think is going to expand massively is where people actually have their money, and understanding, giving people transparency on firstly where their pension is invested, where their savings are invested, and helping them understand what the impact of that is, because at the moment it isn't that clear. But the fact remains that switching your pension is many times, like 27 times more impactful from a carbon footprint perspective than going vegan and stopping air travel. So it's an area where people can have a huge amount of impact. And I think it's something that fintech is really good at, and has demonstrated many times over that they're really good at, is handling data, helping customers understand, improving transparency, and giving people a kind of much more kind of intuitive experience. So I think there's a huge opportunity there for fintech in the sustainable investment space.
Yeah. Thank you, Charlotte. I think I can go next. I think Ricky already mentioned the word disintermediation. I think, this ties very well to the first question, which is, what's disruptor? What does it mean to be a disruptor? Well, actually, I don't like the word disruptor either. I think it's a little bit too aggressive. It's actually about creating value, right? So in my view, fintech, I remember a few years ago, there was a topic about, should it be fintech or tech fin, right? If it, I think, anything, because nowadays, if you tie anything you add tech after a certain word, it suddenly becomes sexy. I think fintech, if it's using technology to make existing product or business, a better experience for customers, it's good, but it's not really changing status quo. I think changing the business model versus certain businesses and creating value is what is supposed to be a real disruptor. And I think this goes into the topic of disintermediation, right? I think probably the pandemic made us think about a lot on all fronts about how efficient our world is, how efficient our society is, how efficient our system is. So, for example, in the efficiency of traditional banking system, right? I think why this rise of why we see the general trend of disintermediation, both in the crypto world and also in the fiat world, powered by technologies such as open banking, is because people see inefficiency in traditional systems, right? So I think is there a way to you leverage these new technologies such as open banking, like for example, to think about if I'm paying for my coffee, if I can just move my money from my bank account to the merchant's bank account, why do I need to use a third-party rail, right? I mean, ultimately it's a customer's choice, but I think in terms of thinking what can really create value for our system is where the innovation will lie. And I think this general trend of disintermediation is a very big area where we'll see a lot of innovation.
Ricky, it feels natural to come to you. Thank you, Rita.
Yeah, sure. So, I mean, this follows on very much from what I'm talking about before, and because when we're talking about disruption, I mean, innovation is about doing new things, and obviously, again, those new things are either driven by a new perspective, and Rita talked about better meeting customer needs. Obviously, that which is sort of the mantra of an early stage startup is let's find a really thorny customer problem and then meet that need with a single point solution. And that is a very efficient innovation mechanism, very focused, but equally can be either sort of high risk, i.e. we're going to try and create an entirely new market that doesn't exist today, or low risk, essentially skip out an element or a piece in the value chain where we basically go direct to customers or whatever it may be. I think there's a lot of and there still remains a lot of opportunity across a lot of sectors around that type of innovation. Obviously, getting to something like when you then say actually well our objective is net zero 2050, for example, then you end up with a completely different set of innovations because you're actually solving a problem, and you do, by the way, if you want to make it work, make it solve a customer problem as well as an environmental problem. If you sit there and do all these fantastic things that help save the world, but actually aren't interesting for customers, don't help them in any way, some customers will be virtuous enough to go for them, but not very many, and it will definitely fail. You need to have at least the customer and the environmental objective. And then obviously now you've got three objectives, you've got the business objective as well. It gets harder to get it right in that context. But equally, you're going to inspire a lot more innovation because you've given different objectives, and therefore it's a lot easier to do things in a new way and differently.
Thank you so much. Antonina, what do you feel? You're living and breathing it every single day with some of the clients you're working with. What are you seeing?
Actually, we can tackle this question from two perspectives, right? What have changed? What have changed for us as customers, because we are actually also customers, right? And in our everyday lives, and what have changed from the perspective of us as businesses, right? As the representatives of financial services, as a business, as an industry, right? So from both, and there would be some similarities and overlaps, but in general, what have changed actually? What this recent year, a very interesting year, have brought to the business and accelerated. So definitely everyone was forced literally in one day to go online, literally absolutely online, right? And that was one of the main challenges for a very huge amount of the businesses, right? And the types of the sub-industries in the financial services industry. So what are the challenges were? The performance of the systems, the absolutely not readiness in some cases of the customer support systems, right? The very low omni-channel strategy that was at that moment already implemented, for example, in the businesses of those companies, right? All all that was directly influencing the bottom line of the business in the end of the year, right? And what was our experience that we had as what changed for us? Actually, using all that, and our customer experience was dependent a lot what is actually the maturity, how mature actually is and innovative is the financial services provider, right? For example, like Ricky is a lucky one whose customers were lucky to have the proper level of the services that they are already used to before the pandemic, right? But there is lots of businesses who had like the other situation. So their omni-channel experience, their user experience of the clients with all the support, with the online lending, with everything literally was very, very different, right? And that was one of the main challenges, and one of the first challenges that all the business provided the financial services had to tackle in order to stay, up to the expectations of the end user, right, to your services, because we are expanding our expectations from our daily routine, social media, retail, like e-commerce and everything, to the financial services segment, right? We want the same level of experience, and not everyone was ready. So this was one of the top priorities that everyone tried to tackle as quick as possible, not to lose the market share, to keep the customers with them, and to stay, in the same line with everyone.
Yeah, absolutely. Thank you. And those certainly came through in the results we showed this year, that productivity level as well. How are you going to look after that customer in a new way and so on? So we couldn't agree more on that. If we look at AI machine learning and we look at that space, obviously that is impacting pretty much every industry very much at this point, some very much at the early adoption stage, some further down the line. Where do you feel the next step is for fintech with those technologies? Can I come to you first, Ricky?
Sure. So, look, I think AI is a really interesting one, because actually we're very much in the infancy of AI. Everyone talks about it. Most people talk about it and don't do it. And at best they're sort of applying some basic machine learning. One of the interesting things is that the tools to do this are improving at an absolutely massive rate. So, to actually build a proper big data stack, which, to be honest, Tandem started building in 2016. When we were building it then, we were using, a whole load of open source components. They're incredibly hard work. It basically took about 2 years to stand up a functional big data stack with, about 20 people working on it. Ironically, move on to, we built 2.0 about a year ago, using a lot of the, built-in Google tools in Google Cloud, which is sort of the leader for data and AI right now. And it took about half the time, about half the team to build the basics. And then we could still apply a lot of the models that we'd already built sitting on top of that, where we have both deep learning, which is sort of true AI. AI refers sometimes machine learning and deep learning being the non-human assisted, and machine learning being essentially humans involved in the cycle. We have both models of both those types running within Tandem. But it's a hell of an investment. If you look at the first time we did it, we probably spent almost 10 million quid building that. We'll probably spend 2 or 3 million quid rebuilding it the second time. Both those amounts are completely outside the sort of startup investment, sort of spectrum, unless you are specifically an AI company and that's everything you do. So I think it's moving super, super fast, but it's still complex. And even when you built the right, setup, you have to find the expertise as well. So I think these things are going to have a massive impact, but the impact is sort of overstated today, and will really get big in about 5 to 10 years time, when this becomes a little bit like the sort of online origination was 10 years ago. It was very few agencies who understood it, and some tech companies who were doing it right. I think this will be very much something that's a set of tools that's out there for everybody in 10 years.
Thank you so much, Rita.
Thank you. I think I agree with Ricky. It's such a buzzword, and we see big techs, using machine learning and sort of, the outcome, making customers obsessed with certain services. That kind of direction actually is sort of negative, right? But I think, there are many ways that, AI and machine learning can be used to to good, to do good. Like for example, in the area of reward and loyalty, basically making customer experience more personalized, and saving and investing insurance, where, you know, like I think, you know, the ability for fintech to aggregate and manage and analyze data to enhance customers' experience is hugely important. And I think there are many, that's a hugely promising area for sure.
And I think particularly, you know, the banking world has always had that negative press, if you like. It has spikes of love and hate, a bit like Marmite, with its customers and so on. So, you know, the good, I think, you know, the more we can show that, the better. Let's come to Charlotte, please.
Yeah, I agree. I'd also echo what Rita said around, yeah, the scope for personalization at scale is obviously dramatically increased with AI, which is great. But to also build on what Ricky said, I think a lot of companies are still at the stage of getting the most they can out of just simple data analytics without even needing to talk about AI or machine learning. I think, you know, people are still, as Ricky was talking about, thinking about their data infrastructure and their data management, and that is a crucial layer before you can get onto any of that side of things. And I think also, you know, slightly less, yeah, it's a little bit less sexy, but I guess the kind of back office and automation opportunity. People have been talking about robotic process automation for quite a long time. That's quite well established, and you can simplify and automate some quite simple processes. But AI is an interesting layer on top of that. If you layer that over the top, it means you can do much more in that automation space. So I think, yeah, from a kind of, I guess, industry perspective, there's a lot of opportunity there, and I think we're only starting to see that get realized.
And Antonina, do you feel that is what's happening in the marketplace? What are you seeing?
Yeah, absolutely. And absolutely resonates with, I like the word in that it is a very promising topic, you know, for financial services, definitely a buzzword and a very promising topic. And one of the recent reports from McKinsey, as far as I remember, it was like, actually, it is as promising as at least $1 trillion like per year, right? Only in the profits. And the other report from Deloitte, as far as I remember, like states that like in the nearest 10 years, this is like Ricky was saying 20 years, actually 10, 15 years, it will bring up to 38% of the profit boost, right? So this is like a 14 trillion something yearly in the extra revenue to the economics in the main biggest 16 industries, right? So this is a very promising topic. But there is a whole bunch of the challenges that the financial services companies actually have to keep in mind when trying to have the AI onboarded into their business strategies, right? One of them, like Charlotte already said, this is a very good, spot on, is actually the data maturity of the company. So if your data, and depending on the level of the maturity of your organization, you are, depending on what is the stage you are at, is actually how efficiently you can adopt AI into your business model, right? And what would be the impact of it into your onto your revenue, right? So if you're at the very first level, like the data usage, right? The data quality. This is the very first one. Then it is the data governance. And only then there is the data insights, where AI brings the biggest boost for you, right? And it has no difference whether this is the back office or the front office. There is like multiple use cases. And one of them, like Charlotte mentioned, this is the robotic process automation. This is the very first one in the back office. But we have a whole bunch of like outstanding use cases for the AI to help you boost your business. This is like in financial forecasting. This is also in the revenue attribution, in the intelligent document processing, right? So data reconciliation, lots of things. And RPA is just only the first thing. And absolutely the same stuff in the front office, right? Whether you are an insurance company or a bank, or you are a wealth management, asset management organization, financial advisory, so like robo-advisory, the voice interfaces in customer support, the chatbots interfaces, and like authentication, biometrics, everything. So all that, customer churn prediction. So all that, besides the regular RPI and beside the regular forecasted and personalization accuracy improve, all that is actually what AI properly adopted into your strategy can bring to your business. But you have to tackle first challenges, how to do the first POC, and then how to scale it for the whole organization. Are you ready for that? Is your organization mature enough to be ready to that? And do you play not only in the first stage, like on this in this sandbox, are you ready to scale it cross-organizationally? Do you have like MLOps resources, expertise? Are you ready to govern all these AI-enabled solutions as a part of your business model in the future? So all that is like also the topics to keep in mind for the C-suite in the financial services companies when they want to adopt AI deeply into their core business model. And this is what we have to do like for the nearest years, right?
So with only 2 or 3 minutes to go, I'm going to start rapid firing because we've covered a lot of ground, but I know also there are some other things we'd like to cover now. So just sort of quick thoughts with the developments in cryptocurrencies and blockchain, do you think there's a future for this in terms of reaching mainstream consumer bases? I'm going to ask for sort of 30-second answers if I can. Please feel free to just answer as soon as you feel fit.
Yes.
Yes.
Is that Rita? This is your field.
Yeah. Well, 30 seconds, I'll be quick. So I think I will talk about cryptocurrency, not so much on blockchain. I think, like, I do believe a future for this to reach mainstream customer base because, like it ties to the freedom, so-called freedom of choice, right? So we're talking about in a digitally native era, right? Like the generation of millennials, Gen Z or Gen Alpha will become the main, customer, the main group of customers we will be interacting with, and they have a whole way to see the world, and I think like use Bitcoin as an example, right? It's the first digitally native reserve asset and settlement currency born purely out of the internet. I think for some people it almost represents certain ideological value, right? For the Gen Z, for the millennials. So I think like giving them that choice, like ultimately it's for the customers to choose what they want to pay with, what they want to keep their cash with. So it ties into the freedom of choice, and I do believe with the rise of like the new generations, it has a potential to reach a mainstream customer base.
Fascinating. Thank you. Charlotte, your thoughts?
Yeah, I guess I'll just add on the blockchain point, given that we haven't talked about that yet. Blockchain has lots of potential applications, but a very consumer-facing one that's relevant for investment management is the democratization of private assets. So, for example, investing into real estate, rather than having to buy a whole building, if you tokenize that building into small components, which blockchain can enable, it makes that entry point much lower for people to be able to invest. And also, because you can then trade those tokens, that creates a secondary market, which massively improves the liquidity. So instead of having to hold that investment until the building gets sold, which could be 10 years, you can trade your tokens with other people. So a very different class of investors can start investing into private assets. So I think that's a really interesting consumer application for blockchain. And there are 2 digital asset exchanges supposed to be launching this year. So it'll be interesting to see what happens with that.
Thank you so much. Antonina, just a quick thought from you.
Yeah, a very quick one. We are running out of the time. So actually, yeah, I agree with both ladies and with Ricky that to make this technology a commodity one, we still have a long path to go. So the first step applications, the real applications in the real business, they're already taking place. We have that in investment banking. We have that, for example, one of the Spanish banks, the BBVA, as far as I remember, they have launched the previous year one of the world's first, they stated, investment loan for a few millions, provided based on their internal blockchain-based platform. So I mean, lots of that is coming, but still, again, let's keep in mind that financial services industry is a pretty regulated one, and blockchain and distributed ledgers specifically, and in general, in different markets, they are still not a clearly pure white area, right? So there is a lot of things to be properly regulated and defined. So I think that would be the main first step that we will have to overcome, to have it as a widely leveraged technology as a basement, for financial services industry. So that would be the first step you have to pass through.
Well, thank you all so much for being fascinating. I know you're incredibly busy, so thank you all so much indeed for joining us. Really, really kind.